Good morning, everybody. Market Michael here. It's April 30th. Interesting market situations going on. What we're seeing is a back off of futures from resistance levels. What we're looking at for the S&P is a test of this support 38 critical, a test of the resistance at Dow Jones for 38 critical, and a failure of a breakout for and a test of the 61% for that Nasdaq futures. Very interesting market so far. You know why I say that? Well, because of what's going on with the dollar and gold. That's what's going on. We're going to go ahead, check a few things, but look at this here. This is an hour chart. You see, this has happened Saturday, Friday night. Friday night this happened. We had a big drop off Friday night. Markets recovered a little bit, but appears to be failing this breakout, which I said would happen. It would fail the breakout of this 61%, go back down, and fall through. By that point, markets should be open, or we get support and move higher. I really think that we're going down though. Sell in May and stay away. I mean, this is the futures right now. I don't know. I could spend hours trying to go into this and develop a thesis, but really, but really, I just think the direction is south. Let's go ahead. Let's check some other things. Let's check gold. This is why it's such an interesting morning. We'll check silver, and then we'll go ahead and check the good old Dixie. Okay. What do we see here? We see precious metals selling off. I don't know how much lower they can go. Not much, guys. Not much, not much, not much. We backed off this 38 critical for the gold. So we've come down and failed this 23% support, and I said it was very possible that we could back down to this 1300 level, which we should not break. If we break that 1300 level, that's an indication that something's wrong in terms of for bears. Something's wrong for bears. But right now, we had the CCI breaking too low for that for silver. We're at 16.3. I mean, that's still in the range, and same here for gold. We're at the bottom of the range, so this should be the bottom of the barrel. I don't know how much lower these go, but I don't see it going anymore. And on top of this, check out the dollar. Look what the dollar's doing. We're at a 30-minute chart. Let's just pop an hour chart up. So this hour chart says we still have a little bit more to go, but I think that this is setting up to start a bear market trend. Although we are breaking through, we could get higher highs, and that could somewhat continue a trend. But I don't know. We're going to have to see and let this develop on a 30-minute. This is definitely overdone here. So we're going to have to see. If we ended up getting lower highs, and that could be a disaster for the dollar, and the dollar is going to suffer from that. Now, let's just check crude. I know crude, we're supposed to get the rig count, and the rig count is going up, so that means more production. So yeah, we went from 69 to 69 to 67, bouncing off this lower bit of support here. Let's check a daily chart, excuse me. Well, this daily chart shows we are going to retrace, take some steps back, but again, I expect to see support around this 65 level. We should see support at this 65. If we don't, that could spell trouble for the price of oil. I think oil and sweet crude is going to go up. It's been a trend, and this trend is going to go higher and higher and higher. So these are things to look for. Let's check out Bitcoin. Bitcoin ain't moving. In fact, it's going down slightly. I think that's going to be the trend, is to trend down. Is there anything else I could look up? Yeah, no, that's about it, guys. So let's go pull up the economic data here. Alright guys, so get ready. I'll post a video probably 8:40, 9 o'clock about the personal income, personal spending, PCE at 8:30. 8:45 we got Chicago PMI, and then at 10 o'clock we got that pending home sales. So we got a very busy morning. Is there anything I could say? Personal income, I'm not really sure what the result is going to be for that. You know, we got auto truck sales Tuesday. We got the Fed's Red Book coming out Tuesday. We got that FOMC meeting. And then Wednesday we're going to get that FOMC rate decision, as well as crude invents, mortgage apps, employment change. Thursday we get that productivity, unit labor cost, trade balance, initial claims, continuing claims, factory orders, nat gas events, ISM service, and then Friday non-farm payrolls, unemployment rate, average hourly earnings, average work week. So we got a pretty busy week. Now check out the futures here. They just kind of started to rattle off a bit, but when you move up too fast, too soon, guess what happens, guys? You know it. Not good. You back down. We got NQ, ES, and YM. Okay. Although we are up as a light green here, to me this is we're still in a negative downtrend. And it's not good. This is not good. Global growth is slowing. Everyone is realizing this, and I think this is becoming the trade that everything is starting to slow. Oops, you can't even see me. So everything is starting to slow, guys, and we're starting to pick this up in the data. So, and we're at the 10-year bull cycle. The 10-year yield is at those critical levels. We're under 5.5. We're going back. We're going under 4%. We're going 3.5 sometime soon. So within the next couple of months, we're gonna keep going lower and lower and lower. You know, I don't know when it's gonna invert, but the fact that it's going this far, this soon, is an indication that something's wrong. Well, with all that being said, guys, I'm going to leave it off here, and I will join you guys around, well, I'll make the video at 8:30, cover the economic data, post the video as soon as I can, and get ready for that 9:45 Chicago PMI number, as well as 10 o'clock pending home sales. You know what? I think I should group in that 10:45, 9:45, and 10 o'clock video. That way it's just not too concentrated. So with that being said, 8:30, get ready at 9 o'clock for a video, and around 10, 10:15, 10:30 for a video. So thank you very much. Please like and subscribe, and I'll see you later.